Let me now get Herald Van Der Linde. He's Managing Director and he represents Global Research for HSBC Hong Kong. Herald, good morning and thank you for joining us. Let's first talk about the global setup. And the global setup is S&P is at a record high, Dow not far away from a record high, emerging markets are consolidating and money is moving out of gold and oil.
That's indeed correct. Good morning to you as well. So what seems to be happening is that there's still good appetite for risk assets, such as equities around. And although some people have said, well, the Dow or I think the S&P is a much better index to look at. The S&P is at a peak, or we see signs of a bubble emerging. We're definitely not in that camp. Long-term multiples for the S&P are close to historical average, so it's not that these markets are overly expensive yet. What we need to see coming through now is a bit of growth to drive these markets higher, earnings growth on the back of kind of GDP growth recovery, which we see particularly in the US.
Herald, what's the view on India now with the Narendra Modi government at the helm? That's the big talking point, right? And a very lean cabinet as well, which got announced yesterday. What's the view sitting outside the country now? Would economy as well as markets pick up at the same pace?
I think, at least my view outside of India is that I think there's a potential for a lot of positive change in India. And of course, there's a lot of debate about what kind of policies need to be put in place in order to put India's growth back on track and put it to higher growth levels. But there is an anticipation of this which is already very high. And my worry is that maybe it will take a bit of time for this to take place, and that markets need to consolidate in the meantime. It's sometimes good to look at other markets. For example, in Mexico, we've seen a couple of years ago, I think it was 2012, a young, vibrant president stepping in. A lot of expectations have changed. He actually delivered on that. They've had fuel price reform and telecom reform, etc., etc. But if you look at the market performance, it peaked at around the time this particular gentleman became the president. So there was a lot of anticipation, and after that a bit of consolidation in the market, and that's probably where I would look at for India's future path as well.
You know, it's interesting that what is happening to the institutional activity. Ahead of the election outcome, which is 16th of May, foreigners were chasing Indian equities. But post the election verdict, when clarity has emerged, the flows into Indian equities have dried up completely. Do you think now the NDA government will have to move, they will have to deliver, they will have to walk the talk before global money managers allocate more money to India?
Now, if you look at the flows, you actually see that mutual funds were reducing their positions already in May, prior to the election. So I think a lot of mutual funds have been selling into this last rally prior to the election in India. Maybe hedge funds in particular have been the ones who've taken up the baton and have pushed that market a bit further higher. But yeah, as I said, in the case of Mexico as well, there's always the story of you buy on rumor and you sell on facts, and I think in India it's going to be somewhat similar.
So at HSBC, what are you telling your clients? Is it time to chase emerging markets? It is time to go back to developed markets, or one should not change their capital allocation to equities because both emerging markets and developed markets are fully priced?
No. What we're saying is that globally, you should still overweight developed markets and be neutral on emerging markets. Within developed markets, we got strong views. We're very cautious on Japanese equities, underweight actually since late last year. We think Europe looks slightly better than the US, but that's where our bets are to a certain extent. And what we're generally saying is that this year we shouldn't expect a re-rating of markets. As I said earlier on, the multiples these markets in developed world are trading at are at historical averages. So we think they will stay there. It's really earnings growth which needs to come through. And that will probably be single digit in the US and maybe low double digit in Europe for this year. And that will also be the upside in these markets. For emerging markets, though, they're trading at lower multiples. And I see very early signs that Asia is taking the right steps in order to reform and bring profitability back, which has been the cause of this low rating of emerging markets over the last couple of years. But we're really not there yet. We're in the middle of a long process. That means we are somewhat okay-ish on emerging markets, neutral, as I said. There was an underweight position, say, 6 months ago. Remain selective. And within Asia, in that particular respect, I think it's time to move out of India and to revisit another market, for example, China, at this particular point in time.